facts, not fear, and what you need to know about the real estate market, but the media actually doesn't want to tell you the whole story. I'm tackling that and more in today's video. Everybody, welcome back to my channel. My name is Caitlin Martin and I am a local Nashville real estate agent and founder of the Caitlin Martin team, powered by Weichert Realtors, the Andrews Group. I specialize in helping savvy sellers who want to sell right and sell smart, as well as working with out-of-staters looking to relocate to the Middle Tennessee area. If this is your first time stopping by my channel, thank you so much. Please feel free to click subscribe down below so that you are notified anytime I release new video content. So in today's video, we are going to be talking about the facts of real estate, not the fear mongering that the media loves to do. And if you aren't aware, the media absolutely thrives on fear-based headlines because they got to keep you coming back for more so that they can continue to get paid by their advertisers. So here's the thing. There is a lot of headlines happening right now about the real estate market, and a lot of times they're not telling you the whole story, which then again doesn't give you all the information so that you are making the best, most informed decision. So what we're going to be doing today in today's video, we are going to be taking a look at facts, what the graphs say, what the numbers say in terms of the overall real estate market. So again, you can make better informed choices. So let's go ahead and dive on in. So one of the places that I really want to start is the fact that the media is not going to tell you that ultimately there's really two real estate markets, and they tend to use facts from whichever one benefits them the most. And so let's first take a look at what those two markets are. So first, there's home prices. Home prices is what the public cares about. That is what drives a lot of decisions, and that's what's going to really grab headline attentions. Like, oh, prices are going down. Oh, the world's falling, right? But then there's also the supply market, and that's what agents look at, because while we can watch trends in pricing, we're also looking at what the inventory looks like, because that continues to tell the whole story. And so as you watch what the media says, sometimes they're talking about things in regards to the supply market. Other times they're talking about pricing, which is more public facing. And so of course, when you start to see those headlines that talk all about how prices are falling, they're not telling you the whole story. You know, you're probably starting to see a lot of headlines that talk about prices are dropping. We're seeing, home prices come down. Here's the thing, what they're not actually telling you is that home prices follow seasonality. Like, home prices are seasonal. And let me prove it to you. We all know that there is a spring selling season. And why do you think that is? That's because that's generally when sellers can get the best price for their home. So that's why you see a bunch of homes come on the market in the springtime. If you look at our numbers historically, you will start to see a bit of price reductions or we'll see more conservative pricing when it comes to the fall and winter, because we know historically there's less buyers shopping at that time. So there's less of a demand. And then of course, as the spring selling season comes, we see inventory pick up, we see prices pick up. So when you start to look at when the media wants to zone in really tight on, say, like month to month decreases, well, yeah, in this season, that's typically what we're used to seeing. But it does not mean that a housing crisis is on the way. It does not mean that home appreciation is dropping. It does not mean that the sky is falling and that everything's gonna start falling apart. So that's one thing to be aware of. Just because you may see some price drops, historically that is what we see. That's not news, but of course the news is gonna try to make it news one way or another. And here's the thing, for those that actually don't know, I used to be in the media for 4 years prior to being in real estate. So I've been in the belly of the beast and I know how things work. So this isn't saying all media is bad, but when I start to see all of these different headlines come out and I'm watching how it's affecting my clients, it's time to actually say, hang on, you're not telling the whole story. Let's take a look at what the bigger picture says, which is exactly what we're doing in this video. So let's actually discuss inventory. So we do, in our local Nashville market, we actually have seen an increase in homes coming to the market. And of course, there's a lot of factors that we're dealing with interest rate and demand and whatnot. So we're watching our local market continue to shift, but just because we see more homes coming to the market, that doesn't mean that we're going to be in an excess of homes. Because if you actually look at the national picture, we still are severely below the level of homes across the US that we would need to be at to have an even supply and demand. We are very much in a deficit, and this came after the housing crash of 2008. So there was actually a historic oversupply and overbuilding of homes that led into 2008. And then after 2008, we have not seen the same kind of recovery. We're actually still overall in a housing deficit for the demand for housing that we are actually seeing across the country. In fact, we've actually been in a 15-year building deficit that goes all the way back to 2008. And here's the thing. Then we headed into the pandemic, and now we're dealing with, inflation and supply chain issues and interest rate. And so there's still a building demand out there, but we are still already working from a deficit. So when you're starting to look at, because again, I know a lot of people are going to start trying to compare things back to 2008, but back then we actually saw this oversupply of housing, whereas now even though we have more homes, especially here in Nashville in our local market, it's still overall we're in a shortage. So whereas there was an oversupply back in 2008, we're still at a deficit now. So that's one of those factors that shows that we're actually not mimicking 2008. Now let's talk about a couple of other factors that led to the crash of 2008. So back then, lenders were a lot more lenient than they are today, and borrowers were far less financially secure than they are today. And let me prove it to you. So back in 2008, banks were just allowing you to state your income and approving you off of that. Now you pretty much have to give a full blood history, a kidney, maybe give up your firstborn child in order to get yourself approved for lending qualifications. So lenders have become far more strict, but they learned their lesson from back then. That's why there are those restrictions in place, even though it can feel like a big headache when you're going through the process. Also, like I said, borrowers now are far more financially stable and far more financially well off than what they were before. And I know that the media will tell you that everybody is struggling right now, but that's actually not the case if you look at the numbers. If we actually look at the number of loans that are being given out right now and what the credit score is of the borrower, now we're talking billions of loans. But if you actually look at this graph, you can see that the amount of loans being given out to people with a credit score below 620 is so small in comparison to where it used to be. So the loans that are being given out, that speaks to the fact that we have more stringent loan qualifications, and those that are less financially in a better place with the higher credit score, we're not seeing as many loans being given out to those with lower credit scores. So banks are really honing in on that. Here's another thing. If we actually look at the mortgage origination based on credit score, you can see that most of the loans being given out today and in recent years, most of those borrowers have a 760 credit score or better. So people are being more financially smart, and they do have those better credit scores. And that can seem, again, that feels like it's going against a lot of narrative that you can hear out there in the news. But borrowers are more financially capable and more financially strong and smart than what they were leading back up to 2008. Another thing that we have to look at, in 2008, people were using the equity in their homes essentially as an ATM. They were borrowing against the equity in their home to pay for things like cars and boats and these luxury lifestyle items. And then they got burned. Here's the thing, we're actually seeing, if you look at this graph, we can see that the amount of people who have mortgage debt has continued to decrease, meaning more people own their home outright than before, which means that they are sitting on a good amount of equity without having that mortgage debt. And then if you take a look at this other chart, so remember, if they have less mortgage debt, but then look at this chart, you see that they have more appreciation in their home. This graph shows us overall home appreciation has continued to grow. Yes, there is that blip when it comes back to 2008, but then it corrected itself and it's continued to grow. So people have more appreciation and less debt, which means that they are financially in a better place versus back in 2008 when people were essentially using their home equity as a line of credit and then ended up getting burned when their homes did decrease in price. Now, another thing that we have to talk about is interest rates, because a lot of times people see these rising interest rates, and again, the media headlines will make you think that like this is the highest interest rate that we've ever seen, and that's just not true. If you actually take a look at this graph is going to show you the history of interest rates going all the way back to the 1970s. So as you can see, way back in the 70s and 80s, interest rates were a lot higher than the 5s and 6s that we're seeing today. Now, the 5s and 6s feel really hard and yucky compared to like the mid to high 2s, low 3s that we had seen previously. But again, if you look at this historically, have they gone up? Yes, if you're looking at the short-term picture, but if you look at the big picture, they are still down. And here's the thing, you may have heard other people say it, but if you haven't, it's worth me repeating it. It's called marry the house, date the rate. Here's the thing, we've got a lot of experts predicting that interest rates will go up. Maybe they'll come down a little bit, but overall, if they trend up, what you would pay today in an interest rate versus what you would pay in the future is going to be different. And as interest rates go up, buying power actually goes down. And so you don't want to sit and wait hoping for something better to come along and then it only goes up, because then it's just going to shoot yourself in the foot. But you can always go ahead, purchase the home, and if rates do go back to those closer levels, to those historic levels that we had seen, you always have the opportunity to refinance. Because if you take a look at things on the big picture, again, home prices continue to appreciate. And so if home prices continue to appreciate, what you would pay for the home today versus what you're going to pay for it from a year from now, you're going to end up paying more. So that's something to keep in mind. Now, here's another fact that the media does not like to tell you, because again, they love to scare you to keep you tuning in. But here's the thing, rising interest rates don't actually mean that home prices are going to go down. In fact, if you actually take a look at home prices, not saying value, I'm saying home prices, compared to watching how interest rates have risen, take a look at this chart. Each time that interest rates have risen, we've actually seen home prices rise. So don't let the media scare you into thinking that because interest rates go up, all of a sudden home prices are going to go down or home values are going to go down. And again, something else that the media most likely will not tell you, but I'm going to, is the fact that a recession does not equal a housing crash. Just because we start to watch our market reabsorb the excess that we had been giving, right? You know, when we were in the pandemic, we were all in a very weird, unprecedented time, and our real estate market kind of did some unprecedented things. And so to take the snapshot of that short time and compare it to historically what happens, again, you got to take a look at things overall, not just these tiny itty bitty pictures. And here's something that the media is not necessarily going to tell you, but I'm going to tell you, right? So if you actually look at the last 6 recessions, because a recession does not mean a housing crisis, period. In fact, in the last 6 recessions, only 2 of the last 6 do we see home prices drop. In the other 4, we actually saw home prices rise. Here's another thing the media will not tell you. Those recessions where we actually did see home prices drop, the recession didn't happen and then cause home prices to drop. It was actually the home prices going down that then kicked off the recession. And so right now, what we're seeing, we're not watching home prices kick off a recession. The recession is happening, or, depending on whether they're truly calling it a recession or not. But regardless, we are not watching home prices take this big decrease in terms of kicking off a recession. We're seeing a lot of other economic factors that are playing into that word recession, and whether we're in one or headed for one or whatever it may be, however they want to deem it, it's the housing prices are not kicking it off. There's other economic factors that are leading to that. And what we're seeing with home prices is the fact that our market had given in such excess, and throughout 2020 into 2021 into the beginning of this year. And here's the thing, that was dictated by supply and demand. And at the peak of the wild market conditions, the market would say the home was worth X, but then the buyers were tacking on that value. And now the market is correcting itself as we start to watch interest rates change a little bit. And we're watching the way that that's affecting demand. Do we still have a strong demand? Yes. Are we still in a seller's market? Yes. We still have a strong market, but that excess that buyers were willing to go to get the house, we're starting to see that excess be reabsorbed. So does that mean a housing crisis? Absolutely not. Does it mean that we're in a recession? That in and of itself is another issue, but we do know that home prices are not decreasing, kicking off a recession, which is what led to a housing crisis. So again, there's a lot to unpack here. But again, these are things that you're not always going to be told in the media. And like I said, when I'm having to have daily conversations with people about what we're actually seeing, there's so much fear out there when if you're actually taking a look at a 30,000 foot view versus this itty bitty snapshot of something, it's real easy to build a story off of a tiny snapshot. But if you're actually taking a look at the wider, broader picture, that tells you something else, and it should actually help settle you more and make you feel more confident in your real estate choices. Now, we've talked about home prices dropping and how, we're seeing price drops, especially in our local Nashville market. Again, that speaks to seasonality. That does not speak to this housing crash, that people want to use that buzzword in order for clickbait content. In fact, if you actually take a look at what the local experts are saying. So if we're looking at what the National Association of Realtors is saying, Freddie Mae, Fannie Mac, if you're looking at those real estate industry experts, they made predictions back in January of what they thought home appreciation would look like throughout the year of 2022, but then they actually have revised those predictions come mid-year. In every single one of the top 5 leading industry experts, they all actually revised up what they thought home appreciation would look like. Now, some were far more generous with their revisions, others were more conservative. You can take a look at this chart and see. But overall, they're still saying that home prices, despite what else we're dealing with, home prices are still continuing to appreciate. And then, like I said, you take a snapshot of what they're saying about this year, but then let's blow that picture out and take a look at what do you need to know in the broader picture. So if you actually take a look at this chart is going to show you what home appreciation has looked like dating all the way back to the 1970s. If you look at this chart overall, where is it trending? It's trending up. Yes, we see that the biggest blip in the chart when it comes to the crash of '08, but otherwise, if you're looking all the way back from the 70s to now, homes have gone up. And if they're continuing to predict that we're going to see home prices go up, now it can be a far more conservative amount in what we expect to see of appreciation over the next year versus the wildness that we saw throughout 2020 through the early parts of 2021. While that was an anomaly, home prices are still expected to appreciate. So what does all of this boil down to, right? So if you're somebody that's sitting on the sidelines and you're wondering, well, maybe I should just wait. Maybe I should just wait for interest rates to go down. Maybe I should just wait for prices to continue to fall. You're gonna be waiting a while, because you know what else in addition to values are going up? Rent's going up too. And so rent, you're paying somebody else's mortgage, whereas with your own mortgage, you're paying down the principal and interest on it, and you're continuing to build value. So while your mortgage debt goes down, your appreciation over the years works up. Another wild statistic is that 90% of millionaires are millionaires because of real estate. Real estate is a solid investment if you are looking at the bigger picture. And so again, if you're somebody sitting on the sidelines, you can sit and you can wait and you can hope that things do what you want them to do. But if you're looking at what the facts and statistics tell us, we know that things are going to continue to go up. And so people always say, what's the best day to buy real estate? Well, the best day, several years ago was the best day, because imagine the equity you'd have now. But really, it was yesterday. And the next best day is today. And the next best day after that is tomorrow. Really and truly, because if we expect to see this massive correction, especially in our Nashville market, where we continue to be a really hot relocation town, and I've given you statistics in other videos, and if you haven't seen them, you can go check them out. But basically the statistics are, by 2025, Nashville in the Middle Tennessee area is expected to have another 200,000 people in the Middle Tennessee area, which of course they're gonna need housing. Are all of them gonna go for purchasing? No, but they need a place to live. Then another statistic out of the University of Tennessee tells us that another 1 million people are coming to the state of Tennessee by 2040, with 57% of that landing here in the Middle Tennessee area. Middle Tennessee in general has a lot of economic factors working for it. So if you are hoping to wait and get a better deal down the line, you're gonna be waiting a really long time, because our market is on that upward trajectory. And so it's better to jump in and ride up that appreciation, ride up the increase in equity in that home, versus hoping that things will get better later. That's, if you're taking a look at the overall picture, we're on this upward trajectory and we're gonna keep moving that way. So are there other factors that come into play? Sure. Could we see little corrections and revisions along the way? Sure. But overall, do not allow the media and the headlines to scare you into thinking that real estate is really scary and that you should wait. Waiting will cost you. There's something that lenders go over all the time, and it talks about the cost of waiting. And so if you're curious what it would cost you to wait, feel free to either reach out to me and I can connect you with my lenders, or if you have your own, talk with them about what the cost of waiting is, because as interest rates go up, your buying power goes down, but home prices continue to go up, which means that what you could afford is going to, could potentially be less than what you could afford now. It all depends. Now, of course, there's job changes and salary increases and all of that stuff that goes into play. But if we're talking about real estate, if we are talking about looking at the overall picture, why do you think the millionaires and billionaires out there pour their money into real estate? It's because it continues to make them money. And here's another chart, right? Because a lot of times people will say, I want to hold that money in the bank, but actually with inflation, the value of your dollar sitting in the bank goes down, while real estate continues to appreciate. And so real estate can help make you more money, whereas your money just sitting in the bank, it's going to fluctuate based on what we're dealing with inflation. So I hope this was helpful. I hope this gave you at least more information and more direction instead of, hopefully this helped maybe level things out if you are one of those people sitting on the fence and the headlines make you nervous. These are facts. This is what we're looking at. This is not a tiny snapshot where we create our own story from it. This is something where we're taking a look at that 30,000-foot view of what's going on so that we can better help educate and direct our clients to make the best informed decision as possible. Of course, there are always factors that go into people's unique personal situations. So if you're curious about what you should do, if you're curious about moving here or buying here or investing here, please don't hesitate to reach out to myself and my team. All of our contact information is below. If you're ready to start that conversation, go ahead and click the link down below where you can book a Zoom call with me, but maybe you're not quite ready for that, and that's okay too. You can go ahead and grab my free Nashville relocation guide that is chock full of a ton of information that can hopefully help you make a decision if Nashville is right for you. Again, my name is Caitlin Martin. I'll see you next time.